All right, welcome back to Talk Tickers, where we like to break down these earnings calls so you don't have to. And today we are diving deep into Tencent's Q3 2024 performance. It's November 13th as we record this, and boy, oh boy, did they have a lot to unpack. So we've got the earnings call transcript here, of course. We've got some stock information, all that kind of stuff. So let's just jump right into it.
Yeah, I think the thing that jumps out right away is just how much they exceeded expectations. 47% profit surge. That's huge. Revenue climbed 8% year over year, reaching 167.2 billion RMB. And their non-IFRS operating profit, which is, their operating profit excluding some of those, certain non-cash expenses, shot up 19% to 61.3 billion RMB. And to top it off, their stock closed at $50.13 USD today.
Wow, those are some seriously impressive numbers. So, what's the secret sauce here? What's fueling this success story?
Well, gaming, unsurprisingly, continues to be a real powerhouse for Tencent. Both domestically and internationally, their titles are performing exceptionally well.
Okay, so let's break down these gaming wins a little bit. What exactly are we looking at here?
So domestically, revenue from games like Honor of Kings and Peacekeeper Elite, those were up 14% year over year. And then they also have their new release, DNF Mobile, which is making a really significant contribution as well. On the international front, PUBG Mobile, Brawl Stars, these continue to be big winners, pushing revenue up 9% year over year.
It's really amazing to see how these games, they just continue to resonate with players worldwide. But let's talk new releases for a second. Anything, catching your eye there?
Absolutely. So they just launched Delta Force, which is their first game that is designed for simultaneous release on both mobile and PC. And what's interesting here is that they're specifically designing these games to be what they call evergreen, meaning they're going to generate consistent revenue over a longer period of time.
So the holy grail of game development, the evergreen title.
Yeah.
So how are they planning to turn Delta Force into the next long-lasting hit?
Well, for one, they're being really strategic about the whole game development process, playing to the strengths of the different studios within their portfolio. So some studios, they excel at player versus player combat. Some are really good at narrative-driven experiences. It's all about finding the right team for the right type of project. They also actually shared some pretty interesting insights about, Delta Force's monetization. So, at first glance, it might seem like it's not performing that well on iOS, but that's not really the whole picture. They're seeing really strong revenue from the PC side, and this is actually a trend that they're observing with their other mobile PC simultaneous releases.
So it's kind of like don't judge a book by its cover, right? You got to look at the bigger picture. So speaking of looking at the bigger picture, let's talk about this potentially major development, Tencent's strategic shift with their e-commerce platform. And this new mini shops platform, I mean, some people even calling this a potential game changer. What are your thoughts on this?
Yeah, I think there's definitely some real potential here. So they're moving away from what they were doing before with the mini programs, which was, a little bit more fragmented. And they're consolidating all their e-commerce offerings within the Witsin ecosystem with these mini shops. So the idea is to create, this unified indexed marketplace that's really tightly integrated with all of Wixin's, social and media features.
So essentially, like they're building a digital shopping mall inside Wixin, right? Which, by the way, for those who don't know, is China's biggest super app, over 1.3 billion monthly active users.
Exactly. And this is a move that has some pretty significant implications for both consumers and merchants. So for consumers, the mini shops are going to provide, a much smoother shopping experience. You'll have features like order tracking, extended return periods, even express return services. Plus, there's this big focus on quality assurance, so shoppers can feel a lot more confident about the things they're buying. And then for merchants, mini shops offer a way to tap into Weixin's just massive user base and reach new customers through all these different channels, like official accounts, mini programs, Weixin's search, even video accounts. It's really quite impressive.
So they're basically creating this like direct pipeline from content consumption to product purchase, all within the same ecosystem, right?
Exactly. And what's interesting is that they actually drew a comparison between mini shops and the rise of video accounts within Weixin.
Oh, how so?
So video accounts initially had all these different formats, right? And it wasn't until they really standardized that format that they saw this huge surge in traffic. So they're hoping to replicate that success with mini shops, providing this consistent and trustworthy shopping experience that's really going to draw users in.
That's a clever strategy, using what they've learned from other successful features within Weixin. Now, one thing that really stood out to me in this earnings call was Tencent's emphasis on AI integration across its products. And they're not just talking about it, they're actually seeing some tangible results.
Oh, yeah, absolutely. And one of the key areas where AI is already making a real difference is in content recommendation and ad targeting. So by leveraging AI, they're able to deliver more relevant content to users and then also target ads more effectively, which of course leads to higher engagement and ad revenue.
Yeah, that makes perfect sense. But I am curious, how does Tencent's approach to AI compare to what we're seeing in the US? Because over there, AI seems to be like exploding right now.
Yeah, that's a great question. So, AI is definitely a major focus for Tencent, but you are right. The pace of AI revenue growth in the US is definitely outpacing what we're seeing in China right now. And there's a few reasons for this. First of all, the US is a much more mature enterprise market. Businesses over there are just more ready to adopt AI solutions. Second, there's a much more vibrant SaaS ecosystem in the US, which provides a really fertile ground for all these AI startups and innovation. And then finally, there's just simply a higher number of AI startups in the US, which drives demand for computing power and really pushes the boundaries of AI development.
So not necessarily that Tencent is lagging behind in AI, but rather that the overall AI ecosystem in China is just at a different stage of development, right?
Exactly, exactly. But that doesn't mean Tencent isn't making significant strides. I mean, they are heavily focused on internal AI adoption. Their own engineers are actively using their Hunyuan AI model to boost productivity. And they're also investing heavily in AI research and development.
Yeah.
They're constantly exploring ways to integrate AI across their various products and services.
So they're really laying the groundwork for a future where AI plays a much more prominent role in their business.
Absolutely. It's a long game for Tencent, but they're clearly committed to AI as a core driver of future growth.
All right, so let's shift gears a little bit and delve into the Q&A portion of this earnings call, because this is where things get really interesting. We get a glimpse into what analysts are focusing on and how Tencent is responding to, their questions and concerns. So one analyst brought up the recent success of several Chinese-made games, and not just from Tencent, but from other studios as well. Games like Black Myth, Wukong, and Whiteout Survival. These are getting international recognition. So they asked about the implications for the industry as a whole and how Tencent is adapting its strategy going forward.
Yeah, and this is a key trend to watch for sure. And Tencent acknowledged, the growing strength of Chinese game developers, pointing to factors like, just this massive and rapidly evolving domestic market, a huge pool of talented engineers, and just a real willingness to embrace new technologies.
So it's kind of a perfect storm for Chinese game development, right?
Yeah, exactly. And in response to this evolving landscape, Tencent is really doubling down on their focus on evergreen games. They believe that, the real challenge these days isn't just creating a hit game, but transforming those hits into, enduring successes. Games that generate revenue for years to come.
It's like the difference between a one-hit wonder and a band with, a long and successful career.
Yeah, perfect analogy. And to achieve this, they're getting very strategic about leveraging the strengths of their various studios, both internal and external. So some excel at fast-paced competitive games. Others are better at creating these immersive, story-driven experiences. So by carefully matching studios to projects, they're aiming to build this, really diverse portfolio of evergreen games.
Makes a lot of sense. Now, another hot topic during the Q&A was, of course, Tencent's revamped mini-shop strategy. And one analyst was particularly interested in understanding, how it differs from the previous mini-program approach and what the potential impact could be.
Yeah. So Tencent really emphasized that mini shops represent a fundamental shift in their e-commerce strategy. It's not just a, cosmetic change. They're moving towards this unified and trustworthy platform within the Weixin ecosystem. So it's all about standardization. It's about quality assurance. And it's about, creating this really seamless integration of shopping within the broader Weixin experience.
So are they essentially creating like a walled garden for e-commerce within Weixin?
Yeah, I mean, you could say that, but it's a walled garden with the benefit of Weixen's massive user base.
Hmm?
And, its deeply ingrained social and communication features. So they believe that this is going to lead to a superior shopping experience for consumers and then also, create some significant opportunities for merchants to connect with potential buyers. And remember that comparison they made between mini shops and video accounts. Well, they also revealed during the Q&A that they've actually seen some positive early adoption of Weixin Pay within Taobao.
Whoa, okay, now that's a big deal. Taobao is like one of the biggest e-commerce players in China. So this partnership, I mean, this could be huge.
Absolutely. It's still early days, but it definitely suggests that Tencent is open to collaborations and partnerships that can really expand the reach of their payment services and potentially create, a more interconnected e-commerce ecosystem in China.
Yeah, that's something to keep an eye on for sure. Now, let's circle back to AI for a moment. One analyst raised a question about Tencent's newly launched game, Delta Force, and they noticed that it didn't seem to be monetizing very well on iOS, at least based on the rankings. So they wanted to know, is this a cause for concern?
Yeah, and Tencent addressed this directly, explaining that, Delta Force is actually performing quite well financially. But, it's important to remember that this is their first major game that's released simultaneously on both mobile and PC. And what they're finding is that while the majority of players are on mobile, the bulk of the revenue is actually coming from the PC side.
So it's a case of, don't judge a game by its iOS performance alone.
Precisely. With these cross-platform releases, you really need to look at the overall picture to get a true sense of their financial performance. It's a reminder that the gaming landscape is evolving, and those traditional metrics may not always tell the whole story.
Very good point. Another analyst raised a pretty valid point about the decline in Tencent's payment revenue, despite the fact that, China's retail sales are showing some growth. Yeah. So they wondered if this meant that Tencent's payment services were losing ground.
Yeah, that's a sharp observation. And Tencent clarified that this discrepancy is primarily due to two factors. First, they've been actively eliminating what they call, lower quality and unprofitable transaction volume, which naturally, that impacts the overall revenue. So they're focusing on quality over quantity. Making sure that their payment services are being used for legitimate and sustainable transactions. And then second, Tencent's payment services tend to be more geared towards smaller ticket everyday purchases. So this means that they're focused on driving transaction volume rather than, the total value of those transactions. And on that front, they are seeing healthy growth, with transaction numbers up around 10% year over year.
So it's not that they're losing market share, but rather there's strategically shifting their focus within the payments landscape.
Exactly. They're prioritizing sustainable growth and profitability over just chasing, top-line revenue numbers.
Yeah. Now let's talk advertising for a second. One analyst was curious about the outlook for Tencent's advertising business, which, has been outperforming its peers. And they specifically asked about the role of e-commerce in driving future ad revenue growth, particularly given, the success of these short video platforms that rely so heavily on e-commerce ads.
Right. Yeah, it's a smart question. And Tencent acknowledged the potential of e-commerce advertising for sure. But they emphasize that they believe they can continue to outperform the broader ad market for the next few years without having to rely heavily on e-commerce ads.
So they're not dismissing it entirely, but they're not betting the farm on it either.
Exactly. They see a long runway for growth in other areas of their advertising business, including, leveraging their advertising technology to increase click-through rates, strategically increasing ad load in video accounts, and continuing to grow Weixin search revenue.
So they're diversifying their advertising strategy and not putting all their eggs in one basket.
Exactly. And that allows them to be more adaptable to changes in the market and consumer behavior.
Now, circling back to AI one last time, one analyst inquired about the financial impact of AI on Tencent's business services, noting that, GPU-powered services now represent a significant portion of their infrastructure as a service revenue. So it seems like AI is becoming a more, tangible revenue driver for Tencent.
It is, but it's worth noting that the financial impact of AI on their business services is still relatively modest compared to, what some U.S. cloud companies are experiencing. And this difference is largely due to those factors we discussed earlier, a less mature enterprise market in China, a smaller SaaS ecosystem, and fewer AI startups driving that demand for computing power.
Right, so it's a matter of the overall AI ecosystem in China still kind of catching up to the U.S.
Exactly. However, Tencent is clearly laying the groundwork for broader AI adoption across, their various businesses. They highlighted how their own engineers are using their Hunyan model for productivity gains. And, various business units are actively exploring ways to integrate AI into their workflows and user experiences.
So it sounds like they're really strategically positioning themselves to capitalize on this AI wave as it continues to, build momentum in China. Now, there was one more question that I found particularly interesting. An analyst brought up the recent internal adjustments within Tencent's gaming division. Specifically, the changes to the teams behind Honor of Kings and Peacekeeper Elite. And they wanted to know how these adjustments relate to, Tencent's overall gaming strategy.
Yeah, that's a great question, especially given that there's been some, media speculation about these changes. So Tencent clarified that these adjustments were actually made some time ago and had been discussed in previous earnings calls. They emphasize that these changes are really part of their ongoing strategy to, revitalize and sustain their evergreen titles, making sure that they continue to engage players and generate revenue over the long term.
Right. It makes sense that even, these highly successful games need kind of a tune-up every now and then to stay fresh and relevant.
Exactly. Games with these massive user bases like Honor of Kings and Peacekeeper Elite, they have the potential to become true evergreen titles. But it requires constant innovation, creative thinking, and a dedicated team. And sometimes, adjustments are needed to reinvigorate those aspects.
All right, so we've covered a lot of ground here, but there are still a few intriguing questions that came up during the Q&A, particularly regarding, Tencent's perspective on the macro environment, their wealth management and lending strategies, and, their approach to shareholder returns. So we'll delve into those topics in our final segment. Okay, so let's pick up where we left off. We were talking about some of the key questions that analysts had during the Q&A portion of this earnings call. So one analyst was really curious about how Tencent sees themselves positioned in this kind of current macro environment, right? Especially with all these pro-growth policies coming out of China and, this whole complex global landscape we're dealing with.
Yeah, it's a tricky situation for sure. For any company that has global ambitions, it's a real balancing act. But, I think Tencent struck a pretty good note here, kind of cautious optimism. They express confidence that, these recent policy shifts in China, these could really stimulate economic recovery. But they also acknowledge that, it might take some time for these measures to really take full effect.
But they're not expecting an immediate turnaround, but they are, hopeful about the long term.
Right, exactly. And they emphasized, the importance of staying focused on what they can control, which is, continuing to innovate, deliver value to their users, and maintain this strong commitment to compliance and operational efficiency. It's a long game for them, and they seem determined to play it smart.
Okay, now let's switch gears for a second and talk about wealth management. One analyst was asking about, Tencent's strategy in this area versus their lending business. And, we've seen some other fintech companies kind of struggling with their credit portfolios. So is Tencent shifting its focus more towards wealth management?
Yeah, it's definitely an area where they see a lot of potential. They highlighted the counter-cyclical nature of their wealth management services, especially, money market funds, which tend to perform well during times of economic uncertainty as people look for, safer places for their savings. And remember, when spending slows down, people often look for ways to, protect and grow their savings.
Makes sense. So they're kind of benefiting from the current climate in that regard. But are they just focusing on money market funds? Or are they doing other stuff as well?
No, they're definitely doing other things. They're actively developing new products and educational resources to encourage users to, diversify into longer term investments like equity-based funds and ETFs. So they're really taking this holistic approach to wealth management, aiming to empower users to make informed investment decisions for the long haul.
Now, what about the lending side? Are they pulling back a little bit given, kind of the economic headwinds we're facing?
Yeah, they confirmed that they are taking a more cautious approach to lending. Their priority right now is maintaining credit quality and controlling their overall lending exposure, which, isn't really surprising given the current macro environment. It's pretty prudent to be selective about who you lend to, especially when there's so much uncertainty out there.
Yeah, absolutely. Okay, so the last question that really caught my attention was about shareholder returns. An analyst was asking about, Tencent's share buyback plans for 2025, which, that's always a topic that gets investors excited. So what did they have to say about that?
Well, they were a bit vague on the specifics, saying that they'll share more details about their 2025 buyback plans during their year-end earnings announcement. But they did reaffirm their commitment to returning value to shareholders through, a combination of dividends and buybacks.
Okay, so nothing concrete yet, but they're sending a signal that they're not forgetting about their shareholders.
Exactly. They emphasize their strong financial position, highlighting, their healthy free cash flow, their self-funded investment portfolio, and their measured capital expenditure plans as evidence that they have the resources to reward shareholders.
Yeah, that's good to hear for investors for sure.
Yeah.
Okay, so before we wrap up this deep dive, it's time for our favorite segment. This is not financial advice, where we come up with a completely wild but, somewhat plausible trade idea based on everything we've learned today.
All right, let's get speculative. So, given Tencent's, really aggressive push into AI and the rapid growth of their international cloud business, how about we go long on some long-dated call options on TCEHY? We're betting that their AI-powered cloud platform is going to emerge as a major player in the global market in the next few years. It's a high-risk, high-reward play for sure, but it capitalizes on, Tencent's strategic direction and their potential to really disrupt the cloud computing landscape.
Yo, okay, that's a bold one. I like it.
Yeah.
But remember, folks, this is purely hypothetical. Do not mistake this for actual financial advice. We're just having some fun here, exploring some potential scenarios.
Always just spitballing. Always do your own research, consult with a financial advisor, and carefully consider the risks before making any investment decision.
All right, so that's a wrap on our deep dive into Tencent's Q3 earnings call. I mean, they are firing on all cylinders, from gaming to e-commerce to AI. It's going to be really interesting to see how all these initiatives play out in the coming months and years. What were your key takeaways from this episode? Let us know in the comments. And until next time, happy investing. Okay, so let's pick up where we left off, talking about some of those bigger picture questions from the Q&A. One analyst asked about how is Tencent positioning itself in this macro environment we're in, with China's pro-growth policies and the global landscape kind of being what it is.
Yeah, tricky for any company that has those global ambitions, especially now. But Tencent, I thought they struck a good tone, a sort of cautious optimism, saying they think China's recent policy changes, those could really help with the economic recovery, but also acknowledging it might take time, right, for those measures to really fully kick in.
So not expecting a sudden turnaround, but hopeful for the long term.
Right, exactly. And they stressed, focus on what they can control, which is keep innovating, give users value, and stay committed to, compliance, efficiency, all that good stuff. Long game, right? That's their thing, and they want to play it smart.
Makes sense. Now, switching gears a bit, someone asked about wealth management versus their lending business. We've seen, other fintechs struggling with their credit stuff. So is Tencent moving more into wealth management?
It's an area with potential, that's for sure. They pointed out how their wealth management services, those are kind of countercyclical, especially money market funds. Those do well when things are uncertain. People want to park their money somewhere safe. Got to remember, when spending slows, people want to protect what they've got, maybe even grow it a bit.
So that part's working in their favor, but it's not just money market funds, right?
Mm-hmm.
What else are they doing?
Oh, lots more. They're building new products, even educational resources to get people thinking longer term, like getting into equity funds, ETFs, that kind of stuff. It's like a full picture approach to wealth management, helping users make smart choices for the long run.
Okay, interesting. What about the lending side then? Pulling back at all with the economy being what it is?
Yeah, confirmed. More cautious on lending right now. Focuses on, keeping the credit quality high and managing their exposure, basically how much they lend out total. Not surprising. With all the macro uncertainty, got to be picky about who gets those loans.
Smart move. Okay, last question that really stuck with me. This was about shareholder returns. Someone asked about, Tencent's buyback plans for 2025. Always gets investors perk up. So what'd they say?
Bit coy on details, actually. Said they'll give more info during their year-end announcement. But they did confirm, commitment's still there, returning value through dividends and buybacks.
So cards close to the chest, but the signal's there. They're not neglecting the shareholders.
Exactly. They make sure to highlight strong financial position, good cash flow, self-funded investments, and careful spending plans. All signs they got the resources to, reward those shareholders.
Reassuring, for sure. Okay, before we really wrap up, gotta have some fun, right? It's time for This Is Not Financial Advice,
Hmm.
where we cook up a wild but maybe plausible trade idea based on all this Tencent talk.
All right, let's go wild. So they're pushing hard into AI, right? And their international cloud business is booming. How about this? We go long on some long-dated call options for TCHY. The bet is their AI cloud platform, it becomes a huge player globally in the next few years. High risk, high reward for sure. But it plays on their strategy, their potential to like shake up the whole cloud world.
Whoa, bold move. I kind of like it. But everyone listening, big disclaimer, this is not financial advice, just us messing around, exploring what IFs,
Exactly, pure spitballing here. You got to do your own research. Talk to your financial folks. Think about those risks before you do anything.
All right, so there it is, our deep dive into Tencent's Q3. They are firing on all cylinders. It's crazy. Gaming, e-commerce, AI, the whole shebang. It'll be fascinating to see where it all goes from here. Let us know your takeaways, hit those comments, and until next time, happy investing, everyone.